Okay, hey everybody, this is Scott here again with my next episode of my live option trading series where I show you all the trades and all the adjustments I made this past week. And so this week here was definitely a bit more calm compared to what we have seen in the recent past, right? Pretty much Monday through Friday, all we've done is simply go back and forth, and just move sideways. Right, very briefly here, if we come to the charts and take a look at SPY, this is an ETF that tracks the S&P 500. We'll zoom in here. So this right here is exactly what I'm talking about. All this week, the market has just done one thing, go sideways. And that's because right now, the market is pinned between these two very important price points. Basically, a major support level right there and a major resistance level right there. And so until the market can break out of this range, either to the upside or the downside, then we're just going to see more continued consolidation and sideways price action. But that being said, however, if we now come over to QQQ, this is an ETF that tracks the NASDAQ. So we'll go ahead and zoom in on this one too. So right there, you can see basically the exact same kind of price range that SPY has been trapped in for the past week. But now the NASDAQ has actually broken out of it to the downside. So now my assumption here is that if the sell-off with the NASDAQ does continue, it will very likely bring down the other indexes along with it. So that means the S&P 500, the Russell 2000, the Dow Jones, etc. These indexes will eventually follow in suit if the NASDAQ continues to push lower and lower and lower. And that makes sense because the NASDAQ, tech stocks basically, have been the ones leading the charge to the downside ever since January. And of course, if you've been watching my channel for some time now, then you should know I'm definitely a huge bear on the market. So seeing this break of the NASDAQ below that major support level definitely got me pretty excited this morning. So definitely keep a very close eye on the market coming into next week because again, if this sell-off here with the NASDAQ does hold today, my expectation at least is to see a continuation of this into next week and things might get a whole lot more crazy. And also, along with seeing a lot more technical analysis in this video, I'm also going to show you 5 new trades I put on this week in WYNN Resorts, Cloudflare, Etsy, United Airlines, and Splunk. And some of those trades already came off for a profit, along with my Alibaba trade from last week and my Roku trade as well. All those came off for profits too. Now, as always, before we dive in here, in case you are brand new to the channel, as I said, my name is Scott, and I'm here to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in case you want to see more trading or investing content after watching this video, you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. All right, and so with that said, at this point, I'm going to stop here and play a few clips that I recorded throughout the week that again will show you all those new trades I put on and some technical analysis along the way. So let's get started. Okay, today is Monday, February 28th, and the market is actually up pretty big again today off the heels of a big rally last week. So let's take a look at the chart real quick here, and we'll go ahead and zoom in. What I'm showing you is SPY, an ETF that tracks the S&P 500. And so at the moment, the market is pretty much right in between this major support level down there and also this major resistance level right there. So basically under 440 bucks per share on SPY and above, call it 430 bucks per share. And so at this point, it's pretty much anybody's best guess as to which way the market's going to go at this point. But I do think if it does continue to rally a bit higher, perhaps we might see a reversal somewhere around this point. Or if it decides to move back down lower, perhaps we might find some support and see a short-term bounce somewhere around there. Now my portfolio at the moment is leaning a bit bearish, and so that's why right now I've been looking for any kind of bullish position to help even out my portfolio a bit. Right? Because even though I personally am bearish on the market as a whole, I definitely cannot see the future. I don't know what's going to happen, like I just mentioned there. So if the market does continue to actually push higher, then I want to make sure I have some trades on that are going to benefit from that. So therefore, now if we come over here and go to WYNN, this is WYNN Resorts, basically a casino. And so now if we come over here and I'll zoom in a bit more, as you can see, WYNN has been in this very nice tight range for the past couple months here. And this range obviously has an upward drift to it. But as you can see, there were many times in the past, including right around now, where this trend line right there in white has held as a major support level. And then conversely up here with this trend line, this one has acted as a major resistance level. And so now with WYNN being on the lower end of this range here, and obviously as you can see, there are a few days where WYNN was trying to fight and stay above this trend line. And now we're seeing the third day in a row where it has actually managed to stay above that point. Then based on what I'm seeing here, I feel confident enough to make a bet that WYNN is going to rally off this point somewhere in the near future and perhaps get all the way back up to the higher end of that range once more. Moreover, if we come down here and take a look at the implied volatility for this stock, this is very important for options trading, right? Specifically, I always want to see high implied volatility relative to the past for this particular stock. So right now with the current IV being just below 59%, we are therefore seeing an IV rank of 57%, that's not bad, and also an IV percentile of 88%, that's pretty darn good. So basically these two metrics here are confirming the fact that the current level of implied volatility for WYNN Resorts is definitely much higher than usual. And therefore, the option prices on this stock are also going to be much higher than usual. And so now coming back to the chart here one last time, for this trade, I'm going to sell a simple naked put option. And I want to make sure I pick my strikes such that it is below this trend line right there. So at the moment, this trend line is ending up right around $86 per share. But I'm also going to go a few dollars below that point to give myself a bit more cushion in case I'm wrong on this trade, or if WYNN decides to retest the lows that it has made in the past two trading sessions there. So I would say perhaps 85 is going to be the highest strike for the put option I'm going to sell here. So now if we come over to the trade tab and take a look at the option chain on the stock here, I was considering going into the March regular monthly cycle with only 18 days left to go. But unfortunately, with only 18 days, these options here, these puts, don't have much premium left. And also, if we go to the April expiration cycle, specifically the April monthly cycle, this one has 45 days left to go, which is a bit too long given my particular strategy. Typically, I like to be under 30 days. So therefore, that possibly leaves me with any of these weekly expiration cycles. And in particular, I'm considering either the March 25th cycle with 25 days to go or the April 1st cycle with 32 days. Now, if we come over here, though, on the right-hand side, you can see the actual implied volatilities for each expiration cycle. Yes, each cycle does have its own independent implied volatility. And I believe these numbers are measured based on the implied volatilities from the at-the-money call and put options. So depending on where the market sees more or less risk in the near future, that's going to dictate how much implied volatility or how much uncertainty is baked into the prices of each expiration cycle. So in this case here, for whatever reason, the market is seeing more risk, which is why the implied volatility is higher at 60% for the April 1st cycle. So therefore, the option prices in that cycle are going to be a bit more inflated. So we'll unfold that tab and see what's going on here. Now, the main issue that comes with trading weeklies is that oftentimes they're not very heavily traded. So that's why if you take a look at the volume or the open interest for any of these contracts, either the call options or the put options, there's not much going on here. And if we were to compare this with, let's say, the March expiration cycle, the March 25th weekly cycle to be exact, you'll see the same kind of thing here. Very little volume, not much open interest, although it's a bit more compared to that April 1st cycle. And same thing with the put options. Not much going on over here. Now that being said, WYNN is still a very heavily traded stock. And so with these weekly expiration cycles, as they do approach expiration, you will see increasing amounts of volume and open interest. Basically, the liquidity will improve over time. So therefore, that's why I'm not too worried about the low volume and open interest right now. And also the bid-ask spreads here are not too wide. So I'll see if I can still get filled at a reasonable price. So now we'll come back to the April 1st expiration cycle, and I'm going to sell probably the 84 strike put option. Just want to give myself a bit more cushion in case WYNN continues to sell off further and perhaps breaks that trend line. And this option is still trading for pretty decent premium. So now I'll go ahead and click on the bid price for this option, and that brings up the sell order down below. So just going to sell one of these contracts, and I'll try and do so for a price of exactly $400, basically right in between the bid and the ask spread. So we'll lock in that price and now go to confirm and send. The buying power effect for this trade is going to be about $1,500. So that capital requirement is totally fine, still under 5% of my total account, which is where I like to be. So therefore, we'll go to send. And there we go, just got filled and price improved to 410 actually. Very, very nice. Great, so last step here is to come back and create my automatic GTC closing order. Basically my profit taking order. So I'll go ahead and click on the asking price now. That brings up the buy order down below. So now I'm going to try to buy back the same exact contract, and I'll try and do so for half price. And half of 410 is 205. And so therefore, if Wynn Resorts can bounce a little bit in price and perhaps head to the higher end of that range I showed you on the charts, and also, of course, if implied volatility can contract a bit more, and then don't forget about time decay always working in your favor as well. So all three of those things can work in my favor to reduce the value of this put option to the point where if it reaches 205, then this order will get executed and I'll be taken out of the trade automatically. So last step is to make it a GTC order so it's always in place, and then confirm and send, all done. Okay, today is Tuesday, March 1st, well after the market has closed, and so in this clip here, I just want to give you a few updates as to what I did during the day. So first off, coming to the charts here, I did place a brand new trade in Etsy. This is actually my first trade in Etsy ever. And this company basically operates an online marketplace for more independent and very small businesses. Now take a look at this line I drew in right here in white. This is a resistance level, which goes back all the way to May of 2021. And actually during this time, it was acting as support, right? As you can see, this line held many times throughout the months of May and June as a very nice support level. And then fast forwarding to much more recent times, let's zoom in here. This line is now, like I mentioned the first time, is now acting as resistance, right? Once Etsy broke down below this point, it did try to break back above it, but ultimately it failed. And now, once again, it's reattempting to do the exact same thing. So we had a big push higher for the stock all the way from a low of around 110 bucks per share. And in just 4 trading days, this stock has zipped all the way up to just about 160 bucks per share. And as you can see today, this stock did try to pierce above that resistance point, but so far it has failed once again. And today the stock finished just below it. So once I saw this happening, I stepped in and made a brand new trade where in particular, I sold, let's come to the trade tab, I sold in the March expiration cycle, the 170 strike call option. So again, that resistance is right around 160 bucks per share. So as usual, to give myself a bit of cushion in case I'm wrong, that's why I backed off and sold the 170 strike. And at the time I did so for $475 in premium. So this option here has increased in price a little bit since I put on this trade, but not by much. And of course, with only 17 days left to go in this expiration cycle, that's obviously not a whole lot of time for this stock to potentially finally breach that resistance and push all the way to and above 170. Certainly possible. And of course, if that does happen, once it crosses my strike here, at that point, I would buy 100 shares of stock and cover the call option. But of course, we'll only cross that bridge if we need to. So that's my new trade in Etsy. And then also, now let's come over to Spotify. This trade is definitely giving me a bit of a hard time. So basically, I've had to roll down my call option all the way to the 155 strike and roll up my put option to the 152.5 strike. So this is obviously now a very narrow short strangle, basically a short straddle. And with the stock finishing today below my short put strike, that's why right now I'm currently short 100 shares of the stock. So basically what I really want here is in the very near future, I want the stock to simply move either to the upside or the downside. Don't really care. Right, because I still do have a positive net remaining credit on this position, but if Spotify simply stays right around this super tight price range, then I'm going to lose more money. Either from having to short the stock and then buy it back if it continues to bounce around my put strike, or kind of the same thing with my call strike, either buy it if it goes above my strike and then sell it for a small loss if it continues to bounce around the call strike. So definitely in a bit of a precarious position here, but this stock does have pretty high implied volatility, which means Spotify does tend to move. And especially given how volatile this market has been recently, I'm pretty confident that at some point pretty soon, Spotify is going to continue moving either to the upside or the downside here. And then finally in this clip, let's come over to the charts one last time and we'll go to SPY. Let's take a look at the S&P 500. Let's zoom in a bit. So as I mentioned in the previous clip, if SPY managed to get all the way to this resistance point, right around 440 bucks per share, my expectation was to see a reversal. And today that's exactly what happened. Moreover, if SPY got down to this point, around 430 bucks per share, I expected to see some sort of support. So SPY fell down to a low of right around 427 bucks per share, and then it backed off it and ended the day right above that support level. And this is a pretty tight price range here, and we've already been bouncing around in it for 3 days in a row now. So therefore, I expect here in the near future for SPY to either break out to the upside or to the downside. Probably just depends on what happens with the Russia-Ukraine crisis and also inflation as well. And because I personally have no idea which way the market is going to go, that's why I do like to have positions on that would benefit in either direction. So again, that's why, as you saw in the previous clip, I put on a short put option in WYNN Resorts to benefit if stocks actually continued a recovery. And then also today, I put on a short call option to benefit if stocks actually continue to slide and perhaps break down below this support level. And that also actually reminds me one more thing to mention here. Because of this pretty nice sell-off here today, unfortunately, now coming over to my WYNN position, this stock has dropped pretty significantly as well. So we'll zoom in here. And there we go. As you can see, unfortunately, it looks like WYNN Resorts here is breaking down below this trend line, which is pretty unfortunate because, again, I literally put on this trade yesterday, but sometimes this kind of stuff happens. So that's why I also had to play a lot of defense with this trade today by shorting shares of stock once it breached my put strike. And so with the stock finishing today at around 81.5 bucks per share, I'm continuing to hold those shares short in case this stock continues to slide lower and lower and lower, in which case it would not matter, right? Because those short shares of stock would cover my obligations if I did get assigned on the put option, and I would still get to walk away and keep the full premium. So those are the updates for today, and I'll see you in the next one. Okay, today is Thursday, March 3rd, after the market has closed. And so in this clip here, I just want to give you a few updates as to the 3 trades I made today. So 2 of these trades were profit-taking orders, and then also I opened up a brand new position in UAL, and this is United Airlines. So first off here with NET, this is Cloudflare, and this was actually a new trade I put on yesterday, although I was not able to record it. So briefly, let's come to the charts real quick, and I already have NET pulled up. So this was a directional trade, specifically a bearish trade after the huge market rally that we saw yesterday. So in particular, I noted this resistance line right there in white, right around, call it 120 bucks per share. And as you can see right there and right there, these were both very clear indications that yes, indeed, this line or this price point is resistance. And so that's why for the 3rd time that this stock got up to that price point once again, I put on a short call option with a 130 strike. And then today, as you saw, this trade was basically a home run. We saw a pretty nice sell-off for the stock right off that resistance level. And so about halfway through the day, I bought back and closed that call option for a nice little profit there. So that is my Cloudflare trade. Let's come back to the monitor tab. Also, I finally took off my Roku short strangle. This trade I've had on for a few weeks at this point. So as you can see, I was short the 150 strike call option and also the 98 strike put option. And at the time I put on this trade, I sold this one for about 500 bucks in premium or in credit. And today, as you can see there, I bought it back for a debit of exactly half price, 250. And then actually also one more profit-taking order that happened yesterday. And again, I was not able to record yesterday. So let's come back to the charts real quick and go to BABA. This is Alibaba. So for this trade, let me zoom in a bit here. This trade, I also had a short naked call option on, specifically at the 113 strike, right around there. And I believe it was on this day right there where Alibaba had a very nice rally up to this resistance point that I've drawn in white there. So it was on that day where I stepped in and sold that naked call option because my bet, of course, was that Alibaba was going to have a very hard time getting above that price, basically above 110 bucks per share. And then as you can see here, there were a few days where BABA was trying to fight that price point, trying to get above it, but ultimately it failed and fell back down lower. So in a very similar fashion with my Cloudflare trade today, for this one here, I was able to close it for a nice profit yesterday. And then lastly here, let's come back to the monitor tab again. And as I said, I put on a new trade today in UAL. Specifically, as you can see there, I sold 2 contracts, 2 put options to be specific, and at the 39 strike. And the reason why I did this, let's come back to the charts once again and go to UAL. So this stock here has a very, very clean support level right around 40 bucks per share. Although as you can see in the past, this stock has had a few days where it definitely got below that point. But for the most part here, UAL has refused to go below 40 bucks per share or so. So that's why when I saw this stock getting very, very close once again to 40 bucks per share, that's why I stepped in and sold 2 contracts with a 39 strike. So as usual, I do like to give myself a bit more cushion in case I'm wrong. Because again, like I said, there are a couple times here where this stock has managed to get below 40. And perhaps if that does happen again, then at least I have a little bit of cushion before my put strikes get breached. And then finally in this video, let's take a look at SPY and see where the broader market is today. We'll go ahead and zoom in there. So we are still bouncing around in this pretty tight price range right there. Below 440 bucks per share on SPY and above 430 bucks per share or so. So as you can plainly see today, once SPY got up to that resistance point right around 440, that price point held once again as resistance, and SPY fell all the way back down again and closed right around 435. So basically, we are right in between this price range now. And I believe you'll find the exact same thing with QQQ. This is an ETF that tracks the NASDAQ, right? Let's zoom in on this one as well. Same thing here, very tight price range, resistance at around 350 bucks per share, support at around 340, and we are still just right in between that range and have been for the past couple days. And because for the NASDAQ here, we are definitely on the lower end of this range, perhaps tomorrow we might see a short-term bounce if this consolidation continues, or perhaps we might finally break out of this range and perhaps continue a sell-off to the downside. Okay, welcome back. I hope you enjoyed those few clips there. And so now lastly in this video, I want to show you a brand new trade I placed this morning, today on Friday. So what I'm showing you here in the charts is Splunk Incorporated. SPLK is the ticker symbol. It's basically a tech company, and take note of this white line right there, which for quite some time in the past acted as a major support level. You can see tons of support all throughout this time here from February through April of 2021, and then once more again right there, after Splunk broke down below that point and eventually recovered back above it. So this stock came back down once again to retest that support level and confirmed it once more as support and then took off to the upside. And then of course coming into this year, like I mentioned earlier, tech stocks in particular are the ones that got hit the hardest. So Splunk saw a massive sell-off, and so far in recent months, it's been going through a lot of sideways price action. But as of today, and I'll go ahead and zoom in a bit more here so it's easier to see. Again, this here in white, this was the former support line I was talking about a few seconds ago, which now, of course, with Splunk being below it, has flipped to resistance. And so today, as you can see here, Splunk exploded actually all the way up to and just barely touched that line. That price point right around, call it 132 bucks per share or so. And so far, it's definitely looking like this line is being confirmed as resistance because obviously, as you can see here, Splunk has backed off significantly from that point. And so for my trade here, once I saw Splunk get up to and touch this point, right around 132 bucks per share, I stepped in and sold, coming to the trade tab now, I sold the 136 strike call option. And at the time I did so for exactly 400 bucks as a credit. So again, with Splunk backing off from that point, the price of this call has dropped substantially so far. And if this tech sell-off can continue, then I do expect to take off this trade for a full profit pretty soon here. So that's my Splunk trade. And then actually one more final thing. Let's take a look at my UAL position, which unfortunately is not looking too good right now. So of course, with stocks being hit pretty hard across the board today, unfortunately, it looks like this is the first time in many months where United Airlines has finally broken down below 40 bucks per share or so. So once again, some pretty bad timing here with this trade, but of course, you can never truly predict the future. But the good news is once this happened, once UAL fell below my 39 put strike, I'm now short 200 shares of the stock to cover both contracts. So therefore, if this stock continues going lower and lower, it does not matter. And so with that being said, that's going to do it for this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.